These gentlemen have all been chosen for their sartorial elegance and handsome, rugged good looks. Please observe. One day, too, you could be selected for this panel. They're going to take us through fintech, which is hip just like them, and digital transformations. I am most interested to hear when digital is going to be embedded in the GP skill set and changes the whole mindset of the portfolio company, that IT is like compliance, is a cost center. Instead, taking it forward to think about IT is an enabler. Digital is the future, it is the now, and if your business is at least not partly digital, you're falling behind. So that's what I'm hoping to hear. But let's see where Mark takes our panel. Mark, over to you.
Thanks very much, Graham. You've just stolen my thunder. This is really the point where a lot of the panels that we've listened to already comes together. It comes together very often in the way in which it's... Okay.
Yeah. It's that human technology interface. Sometimes
Yeah, exactly,
there's,
yes.
we'll just reboot and play on.
Thanks, Myra. In many respects, this is the point at which it comes together in technology. And to take Graham's point, I think this is certainly for the four of us sitting here, we would see probably that the embedded use of technology is a valuable attribute of any business. In this case, we tend to look at operational efficiency and effectiveness, I think. Just out of interest, we are all men. We saw the previous panel, and we're excited to see there's a lot of women involved in private equity. And just to make sure that we try to keep the gender balance, I'm identifying right now as gender fluid, and that means that we are at least moving in the right direction. We said we would just give you a little introduction about ourselves. You can read the stuff in the program, but I thought maybe just to say that one of the best things I ever did in my life was to leave law. Probably the second best thing I ever did in my life was to stay in law. Was to have practiced law, because it's a very useful skill in this game. At a point, I worked at Investec Bank, and I learned there an important feature, and that is that an investor makes their money in the bad times, and they collect it in the good times. And I always thought that was a useful thing to learn. At a different stage of my life, I was very privileged to be Johan Rupert's assistant for 3 years, and I learned several golden rules. And the first golden rule I learned was he who has the gold makes the rules, which you probably know already. The second one was never put face before facts. And the third one, I'll tell you over drinks tonight because I can't tell you in public. As a founding executive of one of the first VC funds in South Africa, we focused on early stage tech deals in the 90s, and I learned that scars on your back were really important. And by the time early 2000 had come around and the market had collapsed, I'd had to shelve my plans of retiring in my 30s. But it was interesting because one of the things that I did as something during the course of this process, I managed a rock band, and it was almost as rock and roll as the VC era and that VC experience at that time. In the 90s. There's a band called the Springbok Nude Girls. Some of you may remember it. When I worked at Venfin as well, one of the other things we did, we reviewed over 600 deals in a year, over a 2-year period, or inquiries. And I learned another thing there, and that is that you should always ask yourself the question when you're sitting in a meeting, and that is, would I rather be surfing than sitting in this meeting? And that's always a good question to ask when you are drawn into meetings. Anyway, I wanted to, that's a little bit of a potted history of myself. I started a business called New Capital Africa about 2 years ago. We do a very similar thing to Lonray in some respects, but quite differently. And the business actually matches capital. And I was Shirley Lotz, who said to me when I met her and explained to her what we were doing, she called it a Tinder for African capital. So that's probably a good way to think about what we do. So I'm very interested in the use of technology to enable people to originate quality transactions. I'm very interested in how it facilitates movement of capital into Africa and the modest contribution we can make in that regard. Just moving briefly on to the topic. So digitalization of PE operations has got a lot to do with the managing and understanding of data efficiently, quickly, meaningfully, and accurately. And as with all businesses, it's very important to be able to make sense of your data. especially in a more complex, interconnected investing environment. So while we're all under pricing pressure, the GPs are under pricing pressure with their 2+20 model, the ability to use technology is an important feature of trying to manage within the constraints that LPs put one under. Reporting on ESG, we've heard the story about reporting on ESG. ESG will be covered, I think, in our conversation today. Regulation plays an incredibly important part of the way in which technology providers develop their business models. We've heard about DD. We think that DD is really important as well, in that if you are able to present quick and efficient and powerful information to your LPs, if your LPs are investing into GPs, or similarly, obviously, in the same way as you might want to get that out of your portfolio companies, that provides a great deal of confidence and is very useful from that perspective. So we will, the panel of experts as they sit here at the moment, we've got Ben and we've got Mark. Ben and Mark generally deal with what I would call a fund-specific technology that really operates as a closed platform and is used to manage your business efficiently. They will talk about the front office and the back office and the mid office. They help squeeze out efficiencies and enable good, improved relationships, interesting investor relationships, obviously, with the limited partners. And the second perspective comprises really the online deal platforms that you see in the market. So there are various deal platforms which are open to the qualified private equity industry participants, and those would be businesses like Orbit, like New Capital Africa. And they offer speed and efficiency to reach, to find deals and to achieve investor reach if you're looking for co-investors or the like. So really, there's not a direct, really a direct link between these two technologies necessarily, but we tend to interact. There's an interaction in the efficiency and effectiveness that's sought in business. And I think that we've decided as well, we're not going to give too much attention to retail-oriented solutions. Crowdfunding, for example, we don't think that's necessarily that relevant, although there are some initiatives, one in South Africa at the moment, to start trying to disintermediate the private equity community. Much of the digitalization process is less about legacy technology and more about legacy mindsets. And we find that for those who live in the listed markets, the immediacy and unforgiving nature of listed markets, the lack of liquidity, in private equity, the lack of liquidity, the slower rhythm, the greater opacity around deal origination, monitoring of the value-added process is quite difficult. The cycles are much longer. The conversations with the LPs are quite different. And data is very hard to access. So we think that on the one hand, this promotes a journeyman environment, but the darker side to this journeyman sort of perspective of private equity people is that it's very hard sometimes to challenge practices and mindsets. And we certainly welcome the opportunity today just to discuss the way in which we think that you could think differently about your technology environment and using technology in your businesses. So that's really just to introduce the team. I would like just to ask maybe as a first question, maybe just to Ben and also to Mark afterwards, just to give us a bit of a sense of the back office, mid office, and front office, and what that does, and broadly what you do inside a PE fund. Just give us a sense of that, Ben.
Sure. So good afternoon. I'm Ben Godersky. I see they've used my pre-lunch photo. I work for S&C Advent, and we cover a number of portfolio management, client reporting, account management solutions to cover fund administrators, PE firms like yourself.
Yeah, sorry. Mark, do you want to give
Yep. Hi, everyone. Thanks for the opportunity. Very excited to be with you all today. I've been in the industry for quite a while, but you can't tell from my accent. I'm based in London, originally from New York, and was in Boston for quite a while. But I'm head of new business and existing clients in the EMEA region for Eagle Investment Systems. And we're part of BNY Mellon. We're a wholly owned subsidiary, have been the whole 18 years I've been with the organization, and we provide data management and accounting and performance technology solutions for the marketplace. So I'm happy to share with you all today some things that we're seeing around digital transformations in the space, and also how we see fintechs and new technology that's coming up impacting and having an effect on everything that we talked about so far today.
Lanre, maybe you sort of introduce yourself.
Sure. Afternoon, everyone. I'm Lanre, co-founder at Orbit. We're a digital investment ecosystem for Africa. So, whilst Mark said we, do similar things differently and is used the Tinder analogy, we like to think about ourselves as more Match.com, deeper, meaningful relationships with our platform users. But we'll tell you more about how investors, corporate and financial services intermediaries leverage our platform to digitize their business development. Thanks,
Lanre. Ben, maybe just tell us a little bit more about. Sorry, I jumped the gun on the back office, mid office, and front office. But maybe you could just tell us a little bit more about what your business does, and then just the problem you try to solve for fund managers.
Oh, absolutely. So, as an example, we had a private equity client who were looking to expand, and as part of that, they realised that they weren't very efficient. All their back office was our biggest competitor, Microsoft Excel. All their spreadsheets were on there. A very manual process. Client reporting was a problem. So we used our portfolio management solution and our reporting solution, migrated their data over onto that, which made them more efficient. They could produce their reports a lot quicker. And then as a second stage, we were able to offer them some outsourcing services to grow the team without having to employ people locally.
Thanks. Mark, do you want to just tell us a bit about yours as well, because of the links between the kinds of stuff that you do as well?
Yeah, no, so we've provide, like I said, technology solutions in the space. And I think what's really interesting in the perspective that I also wanted to bring is from your investors investing into the funds, how they're managing and they're maintaining all the investments that they have in PE and other alternatives or other illiquid investments, and the room for efficiencies to be gained in the process of how you're providing them with information, how you're servicing them. And that's sort of an area that we can spend time discussing a bit more if you want.
Super. And maybe briefly, just Lanre, just tell us a little bit about. Just tell us a little bit about just the problem that you're trying to solve. We know broadly what you do, but just the problem you're trying to solve in the African ecosystem.
I think we're all quite familiar with the private equity environment, and you speak to any of the GPs about digital deal origination, and they'll be like, we know everybody in the market, we see every deal, and our secret sauce is being able to source the deals that nobody can find, and that's what we sell to our LPs. And I just sit across that, I'm like, bullshit. There is no way. Everybody in every market, and you see every deal. And I think we've all experienced it from our various backgrounds, working in the industry. You fly into Lagos, Nairobi, Johannesburg. You meet with the banks in the same hotels, and everyone essentially often are looking at the same transactions. But in the continent as diverse as Africa, and the number of companies that are growing every day. We all are familiar with the recent McKinsey reports put together by Lake Aceh, and the number of companies that turn over $10 million on the continent. So there's literally no way any GP can and or not say we know every opportunity in the market. And that's the underlying thesis behind a digital platform, which is basically aggregating investable opportunities directly matched to your investment mandate and your investment thesis, so that you can essentially digitize your deal origination process. It's not going to take away the usual, still, doing your due diligence and kicking the tires and going out there to originate. But the whole idea is, augmenting your deal origination process with a digital strand, and that's what element of the problems we're solving.
Thanks, Lanre. I must say, I certainly share that view that no one does know the whole market. This is a huge market in Africa, and we hear the same thing quite often from people. They know everybody, and Very often they don't. Maybe let's just focus back onto the technology, if I can, just starting with you, Ben. Just talk to us through a little bit of the reporting stuff that you're able to deal with. Perhaps shed some light on is it real time? Is it dynamic reporting? Are you able to, do you deal with the ESG requirements? How do you do that? The traditional requirements, due diligence, how do you facilitate those sorts of issues with your reporting and your technology?
Sure. So we offer a reporting portal as part of our solution. We've come from more of the asset management space. We're finding that a lot of our customers at the moment are looking at private equity more so we're sort of moving into there. And it's quite interesting because there's obviously completely different markets from a reporting perspective. It's a completely different list of reports. So we're able to completely customize and provide any reports you want. So if there's something you want, we can pull the data from our portfolio management system and provide it on a tablet, on a laptop, being sent via an email as a report pack. Can be real time, not so much a requirement for the PE space, but it can be next day, weekly, batches, consolidated reports, however people require them.
Mark, just out of interest, what insofar as your solution is required, your solution is concerned, give me a sense, if you can, just of what assets under management level, if that's an appropriate measure, are you able to start engaging with private equity funds? I mean, what do they need under management to be able to have conversations? I'm going to ask the same of Ben as well. It's just so we kind of know where the cutoff is. I mean, just bearing in mind, by the way, that in Africa there are only 12 funds with over $1 billion under management. So it's an interesting number. The rest of the funds are very much smaller. So it's with.
Yeah, so from a global perspective, we have many different types of both asset owners and asset managers using the platform. Our platform is it's very configurable. We are designed to really support larger organizations. I think the interesting thing about the alternative space and what's happening, and one of the things that I'm excited to be here to talk to everyone about today is, and it was mentioned earlier today, is the idea of as more institutional, more pension, other types of sovereign or insurance assets flow into the space at a higher percentage. I know we were talking about 10%. I know some institutions where it's up as high as 40% of assets. Like Helene was saying in the last session, that drives the need for more robust institutionalized processes. It drives the need for standardization, and those forces are going to continue to press on the model and the industry, how deals are put together, and the process and the processing that goes along with that. So whether you're trying to do these operations yourself in-house or you're working with the service provider to do that, there's many opportunities now with emerging technologies, with the vast ecosystem of fintechs and players to really add efficiencies into the process. So, you know, every conference that I go to where we talk about digital transformation and technology over the past, I'd say 3 or so years, everyone's talking about blockchain and distributed ledger, and I always roll my eyes back and say, oh, why are they talking about that? The interesting thing about, I think, the PE space and other liquids is that this is actually a space where it makes a lot of sense, where it can enable efficiencies, where it can drive the benefits that are talked about more on the public market side. So I think as technologies like that evolve and become a standard, it's not like there's going to be one blockchain and everyone's going to be on it. You might have it by a couple of large global players and then regional support, but giving access to regulators to see the same information that the GP and the LPs are seeing, that type of transparency is going to really help move forward the efficiency. It'll help make the industry in general help it scale. But because it's a different kind of problem than you have today on the public or the listed side. There's many more individual investments here that need tracking and governance around it, and that's actually something that blockchain and distributed ledger technology can help with, not just on the actual valuation and transaction, but imagine all the legal documents, everything related to the structures of the fund. So there's lots of room in that space. I think another really exciting space is with AI, and we were talking before about due diligence. How can due diligence impact the technologies that we have today versus, let's say, 10 years ago to manage and store data and then make sense and analyze that have exponentially increased, and that's of course due to all of the innovations that we've had with things in the consumer space that we deal with every day, like a Google or a Facebook. Those are all very scalable data technology. So when that becomes available to us, and that's happening now, you have Microsoft, you have Amazon, you have Google opening up their clouds, that allows you to store a lot more information and then develop algorithms to then use and interpret that information. So that's where being able to automate due diligence, be able to provide fraud checks, there's a lot more that can happen in that space, and you're not trying to take all these individual financial reports and cram them into some legacy technology. These tools are really designed to take in lots of data and then do really complex analysis on it. So it's things like blockchain. It's things like being able to use these new data technologies, and then once you're there, you can then turn on AI and AI and machine learning. Again, it sounds like this is really pie in the sky kind of stuff. How is that going to help us in PE? But that's how. For example, valuations. We were just talking in the last session about it's very easy to come up with a valuation for something. Yeah, so for residential real estate, we've had algorithms, AI algorithms for a long time that come up with valuations for that. There's a website, Zillow, in the States that lets you compare your home price and look at other people's. That same technology behind that, the AI behind that, can be used to create valuations daily, intraday valuations for lots of different things. And right now you're thinking, well, we don't need that. Our investors don't demand that. But as the space grows, as it scales, as you have more investments that you have to provide this information on to more organizations like pensions and other institutions, those demands will increase. So, that's another really exciting space that you'll see in the next. It'll be 5-10 years. Things happening around. When it comes to enabling any of those things, having good control of your data is really critical to that.
Can I stop you just for 1 second?
Sure, because I'll go on for like half an hour about
I want to bring
this.
us back to the AI section in a second, because I just want to touch on it because it tends to be top of mind. But just to check with yourself and Ben, at what level, just again, what level of assets under management does your technology, how low can you go in the assets under management level to serve a client so it's not too expensive? Is there a limit?
There is a limit, unfortunately. We do appreciate the region we're in. We tend to suggest around 2 billion rand is the low limit.
Around 2 billion rand.
2 billion rand and rand, not dollars. So from that, anything underneath that, it starts getting, it's not very cost effective. Client, so.
How about yourself, Mark? Where do you guys sort of?
We have partners, so if it's someone who is interested in trying to leverage the Eagle technology, I'd be happy to talk to them regardless of the AUM.
So if there's a VC fund, for example, with 10 million, you may have $10 million or $20 million under management. Would you be able to provide them with some light form of service then?
Yeah, I would be happy to talk to anyone about any of their needs, regardless of their AUM. We're looking to work with. We view our clients as partners, so we're looking to choose the right people to work along with.
So the interesting part about that for me is a separate question which I'll ask. I'd just like to just go back to something first, and that is eventually is those people who don't fall into the categories where they're able to get service from you, what are their alternatives in the meantime? But we'll come back to that in a second. Just talking on AI, AI seems to exist across a continuum from a series of if arguments that learn your preferences and provide, there's a sort of pretty basic thing that people call AI these days, right through to much deeper learning. Give me a sense, and I'd maybe just like to turn to London, because you'll be using some kinds of algorithm and to do your matching. Give us a sense of the depth that you're operating at now and where you think the space can go from an AI perspective.
I don't really like to get into the AI and blockchain Kool-Aid because someone puts together a very smart Excel spreadsheet with macros and says it's AI these days, So, but to your point, yes, there is room for evolution in technology. So, we use algorithms to match at this stage. But it's interesting, at the very early days, say, a year and a half ago, we're thinking about exactly this valuation point. So you build a valuation model. It sits on a spreadsheet. You're looking at maybe oil and gas asset acquisition in Nigeria. And a pipeline blows up somewhere, which is essentially change the political risk, or there is, some instability in Cairo or whatever. How quickly does that translate into the valuation of the asset you're about to acquire? How quickly can you capture many micro activities which can be aggregated from, say, conversations on Twitter and feed that into a model for valuation? So these are some of the things that we see as direction of travel, and that's the whole idea when we say about, deal origination platform. A transaction is a single point activity in the life cycle of a fund, but there's so many other ancillary activities that goes into helping that transaction get across the finish line. But again, as understanding exactly where your market is for Africa, there's no point at this stage, building a tool that nobody needs. But definitely direction of travel, we see that a lot more intelligence can be applied to deal origination, deal transaction valuation, portfolio monitoring, and of course, exits at the other end.
And sorry, to interrupt.
I was going to ask you.
That's an interesting point as well. Sometimes the cart goes before the horse. Sometimes partners and vendors go, "Oh, fantastic! It was great technology," and they release it, and then they realise it's more of a burden than it was beforehand. I mentioned real-time reporting before. It's something a year ago was very popular, and everyone realised the headache that went along with real-time reporting. And actually, do you need to check something every half an hour, every 10 minutes, or can you wait a week? Actually, you can wait a week, or you can wait 2 days. So sometimes it's about whether you need to use that technology or not.
Yeah, in fact, Mark, you used the term illiquids. And just going back to that, Ben, I'm interested, certainly from what Lonray said, I do think that while reporting does not need to be dynamic, if there are massive movements in currencies, as happens, if there are massive movements in commodities, those are quite often things that are useful for you to understand in your broader portfolio if you're managing, even if they are liquid assets, they can have quite material influences. How easy is it for you are you able to provide that kind of reporting? Or perhaps that's more event reporting, but it's certainly, are you able to?
Absolutely, as I say, it's a portal. So we can send those, you can send alerts out to the client and end clients. End clients can request reports because it's a direct connection to the portfolio management system. So yeah, it's very possible.
Yeah. And Mark, when you're dealing with reporting, to what extent? Typically in the past, people will send out a PDF or a Word document with the current valuation or perspective on the portfolio. Can you just share with us what sort of dynamic tools are available that you're able to provide?
Yeah, so this is, again, it's another trend not specific to something related to the technology that we offer. But again, when you look at the space, and this was sort of where I was going at the the end of the my last comment, is that another space to gain efficiency today is the data and the process that you're using to provide information to investors and the reporting around that. I know some very large asset owners that maybe have 300 or 400 private investments that they're keeping track of at any given time, and every quarter they're going to get 400 PDFs, and they have to have someone scrub out all the transactions, take all the transactions out, take out all the valuations, and type that into their internal systems where they actually keep track of the investments. And so that's a huge burden for them. It's a pretty inefficient process. Now, there are other areas of the industry where we're still sending faxes around for things, so it's not as labor intensive as that. But that's another place where either yourselves or a service provider being able to provide data files with the information in a format that's the ideal would be there's a standard format that everyone agrees to adhere to, and that's how the information is reported. God forbid we did that, but that would really help aggregate the transactions. It would help aggregate the valuations, And then that's the thing that's going to help it scale, right? You're being able to receive the information more easily is what's going to give people confidence to invest more and more in the space, because they know they'll be able to see that information at any time. The second piece is the underlying information about the underlying investments and providing transparency around that. And that obviously happens less frequently, but it's another bit of information that would either come in a PDF or in a bespoke Excel spreadsheet that someone then has to dissect and pull apart. These are areas that we're not inventing anything new. It's not rocket science. It's just trying to actually, provide that information in a more streamlined, timely manner. And there are many different ways for you to achieve this within your organization or working with your service provider to do. So, this is another area that when you're talking about transforming and gaining efficiencies, you may have one or two people internally that are spending their time producing these bespoke PDF reports or bespoke Excel workbooks that you may want to look at redeploying them to do some higher value activities and have that become more of an automated, even self-serve. Is there a portal that the investor can go into and download the data as a data file or schedule it to be delivered to them on an automated basis? So there's lots of room on that side for innovation and transformation. And it's not just across this space in the listed and public markets. Those same kind of efficiencies are trying to be wringed out of the middle and back office today, and that's one of the major things that's driving investment in the space. It's driving the move to the cloud. It's driving a lot of the other technologies that we're seeing. I don't know, Ben, if you see the same thing.
Absolutely, and I think it relates to another discussion a bit later on, I think, but there's a lot around efficiencies we're seeing with hosting and outsourcing or right sourcing or managed services, where previously, 3-4 years ago, if you spoke to a private equity company or a hedge fund, or they'd turn around and say, no, it's got to be here, I need a box I need a box downstairs, you can't access it from outside the building. Now, the first point, we don't want don't want the footprint, and there's 3 of us in this building, we want to do these 5 tasks, can you do it for us? Can you do the recon in the morning for us? Can you review the transactions? And they're happy to pay someone else to do that rather than have the overhead themselves.
Yeah, and also, I was just going to say, if you think of this world that I was talking about with the blockchain, I mean, if you're as the investor, if you have access to the blockchain, then it's just there's no information transfer at all. You're getting the information right off of it. So whatever transactions were done, you see the second it's posted. Whatever new valuations come in, you see those the second those valuations are made available. So those are the types of things that will really, over time, streamline the process. Is it going to happen in 3 years? No, but 5-10 years, we'll see that kind of innovation.
Just, I'm going to move to Lorna. I just want to finish off on this topic a little bit. Ben, in the event that a fund has raised sufficient capital to, they've done Fund 1, they're now moving into Fund 2, they've raised sufficient capital to have a conversation with you, they're 2 billion rand. One of the scariest things about moving into a provider is not actually the cost, direct cost.
Sure.
It's all the cost of actually having to get your data to the level that they need to use it. It's a disruption of those processes. Can you also just maybe walk us through a little bit of the process when someone wants to move from having used Excel spreadsheets, PDFs, whatever they've used, into a more mature technology environment?
Absolutely. I mean, we have data migration teams, professional services teams who are paid just for that job. So if a client is interested in moving forward, we'd organise a estimate review, and those teams would sit down, they'd draw up a PSE, a professional services estimate, and say, we believe it will take 20 days to do this, 40 days to do this. Part of that conversation, it's, do you want the data back from inception? Do you want the data back 6 months, 1 year? And what data do you want to put in? Do you want to put in positions, transactions? We deal with people, although we have for our main system, we have a limit of 2 billion. As Mark was saying, we do have local partners as well. So if people are smaller than that benchmark, we still have conversations and we see if we can assist. It may be they still have to stay on Microsoft Excel, but we can still help from the data feeds perspective or the reporting side of things.
Thanks. And then just that question I had asked is, if you fall below that threshold, what are your solutions if you're a small fund making your way, trying to squeeze out the efficiencies with technology?
So, as I said, so we also have partners in the region, and if we can't offer them the full suite, we can still have discussions around areas where we can still enhance the effort there. So it may be we can't replace Microsoft Excel, we might be able to bolt onto Microsoft Excel to make it still more efficient than what it was. And then over time, if the funds grow, we can talk about adding more stuff on.
Thanks very much. The other thing I suppose that's interesting is are third-party apps and third-party providers able to access the information? For example, you talked about regulators. I mean, if a regulator has direct insight, if a regulator has direct insight into the GP data on particular, say, on ESG issues or whatever regulatory issues they were seeking to cover, Basel. Are you able to, A, provide to deal with those permissions, and secondly, to enable other third-party apps to layer on top of what you're doing usefully?
Yes, is the easy answer. We have, we speak to the provider, we find out who it is. Obviously, we don't want our data going to anyone. But if the client contacts us and says we want to send the data to this regulator, we're absolutely fine with that.
Yeah, and this is another area I was talking before about having control of your data and using that as the foundation to enable these things. Regulatory and also these third-party connectivity is one of the things that provides. So, for example, if a regulator needs to know what you're holding or what specific transactions happened, for the most part, that's the same data going to different people. So right now, those requests are usually handled individually in silos. So depending on who's asking for it and what the purpose is, they're seeking out the data, they're cleaning it up, they're organizing it, and they're making it look nice to send it. If you have all your data organized and aligned fundamentally, then it's very easy to do those extracts and have those extracts be produced with a very high quality with minimal effort. Similarly, there's lots, because of the way the cloud and some of the distributed technology works, there's been a big push for these web-based or online APIs to transfer data back and forth. And that's another thing that we're seeing is that once you have control of your data, giving the right people access to self-serve and view that information with the right privileges around it, that also enables you to turn on these new capabilities. So if it's something that needs to get a list of all of your transactions or to get a list of all of your valuations or what your investment is, and then use that information to give you a view or some insight that you wouldn't have been able to derive otherwise, turning those third parties on is very easy because, again, you're just giving them access to that same data. You're not allocating a person and telling them, okay, every week you have to create this Excel file to send in an email to these people, and then they're gonna use it. The third party can just access the data directly, and that enablement, obviously in our space it feels very uncomfortable right now, but that will become the norm over the next 5 to 10 years. And in fact, all of those tools, being able to access and get the ability to use those tools, that will all be enabled by that type of technology. So unless you're able to offer it, or you're able to provide the data in that way, you probably won't be able to use that technology. So that's another enabler to having this solid foundation of data.
I mean, I make an assumption that at the tools that both of you use, Ben and Mark, that the technology that you provide is that your security systems are solid. I guess for those of us that move a bit faster and lighter, Lanre, for example, we tend to be in a situation where we're quite exposed actually to a lot of security risks. We deal with quite sensitive information in what we're doing as well. What is your sense around? I mean, how do you manage your security environment at Orbit, for example?
Thanks. I mean, it all starts with the architecture of our platform. So, being built on, I'm not a tech guy, but what I like to call a triple lock security system, right? Both in terms of the backups and essentially the architecture of the platform, but also the general rules that guide the use of the platform as well, in terms of how people interact with it, where they can access it, and all of the other security systems that we put in place. So that's part of what we've put in place.
Got you.
Yeah, and from our perspective, we're owned by the Bank of New York Mellon. We are the Bank of New York Mellon, so they spend about, they're now up to about $3 billion a year in technology. So we use their data centers. We're able to leverage all of the investment that they make from a cybersecurity perspective. Like my laptop, everything has to be locked down to the Bank of New York standard. It's not like we're just an independent technology company. We have actually a lot of things internally and policies that we have to adhere to, not just for the technology that we're hosting on behalf of the clients, but the way that the staff and the team that supports those clients interacts with them.
Thank you. Do you want to add anything to that, Ben?
No, I was going to say very much the same. SS&C are a large global company. Our mobile phones, if you get the passcode wrong 5 times, it wipes the phone, which is very annoying when you've got small kids.
Laura, can I just come back to you to perhaps one of the things which might be useful just to pick on for a moment, if we just divert the conversation to deal platforms. Maybe just give us a bit of a sense of some of the different types of deal platforms that are out there that we see. We did mention, I think, matching platforms, crowdfunding, bulletin boards, whatever. Just give us a bit of a sense of the different types of deal platforms that we see being used to facilitate capital movement into investments, and perhaps also just their business models.
Sure. I mean, within the sort of African context, deal platforms are still novel. I think, between both of us, I think, we can count on one hand the number of deal platforms out there in Africa. But I think globally, we've seen, the evolution of various deal platforms. So the likes of Deal Nexus out of New York, they've been going for quite a while and have morphed into a bit more interactive deal platform. But then there's the sort of, different types of platforms. So you have platforms that are more just a database, and everyone calls that a deal platform. You go in there and you can search or see what's going on there. We're more on the matching basis, so it's not essentially a sort of a eBay for transactions. It's based on your investment mandate, your investment thesis, the asset class, region, sectors you're interested in, and the transactions will match based on that, and then sort of facilitate the interactions between an investor and a target company. But again, still holding on to the ecosystem strategy approach around that, in terms of what are the other ancillary activities that go around a transaction that are required in a transaction to help it to get to financial close. Then you have, like you said, the bulletin boards, which is where you find with more chambers of commerce, and they put out, we've got all of these projects, and it's essentially a list where, okay, so who is the promoter, what's the status, where are the documentations. Some of those are not necessarily the most efficient. And then you look around in Europe as well, a couple of deal platforms, which actually, a number of interesting ones, which kind of solve the GP-LP problem. So again, obviously, it's pretty opaque markets. They're all kind of GP fundraising process. There are platforms that actually solve for that as well, and they've done quite well in both in terms of funds raised through the platform, number of LPs that are active on it, and actually that will go to those platforms as a preferred source of originating PE funds to back.
Thanks. I mean, it's just interesting you touch on databases, sort of laundry lists of like a gum tree of transactions that you often see done through to more complex or more, I would say, more sophisticated platforms. Just give me a sense, for all of us who work with networks, we don't work with databases, we work with networks of people we know and things that we do. Out of interest, what steps do you take to try and ensure that at least the quality of both the investors and the investees on your platform meet at least some kind of standard, some kind of quality standard, so that people can be comfortable that they're seeing something useful?
Oh, good. So starting with the investor side, we only onboard institutional investors on our platform. So this will range from the banks to the PE funds and other asset classes. So we don't take on, even family offices, we don't take on family offices because again, their sort of investment thesis is less structured. It could be on the whim of their patriarch and he doesn't, fancy South Africa today and then that's it, So we don't bother with those guys. We don't bother with HNIs as well. So strictly institutional and regulated investors. On the sort of supply side in terms of the deal flow, the bulk of our deal flows would come primarily from financial service intermediaries. So these are the investment banks, investment brokers who will use the platform as a tool. And that's also the important, mental shift that we try to tell to the the PE funds and other funds who use the platform, that it's a tool that is used by a lot of financial service professionals to help them with distribution. If advisor based in Nairobi cannot come down to London every week to shop around his deal, so why can't he, interact digitally more cost efficiently? So that's one filter. The other filter that we also apply is also we have a fully functional deal screening team that would make sure that all of the information that would be requested by a potential investor is available before a deal is approved to go live. Because that's one of the other pushbacks you get from the PE funds who are a bit more reticent about the deal sourcing digitally. You're like, you're going to be seeing all sorts. No, it's not. There is a pure, rigorous process that you as a fund would typically go through yourself that we have actually built to be able to deal with the scale. So it's almost a cost reduction exercise for you, whereby instead of you getting this 100, junk emails in your inbox with a guy with a plot of land in, Lusaka saying he's doing agri, we would have already shut that down, and you'd only get the quality stuff come through based on, again, we have our own parameters of ticket size, number of years of operation, audited accounts, all of the, initial preliminary access, or information you need to access to make a very quick decision about a yes or no. Before moving a transaction forward. So those are some of the gates we've put in place to make sure that the transaction interactions on the platform are of high quality.
Thanks very much. Perhaps just if you could share with us, if someone wants to engage with a deal platform such as yours, how would they go about it? Afterwards I'll share how we might operate, because it's interesting as well. We operate slightly differently, but maybe just share with us, how would someone engage with you as an investor, PE investor?
With the PE investors, they're quite laborious dealing with these PE guys, right? So you still have to go there and talk to them and explain, and then, you then have maybe the younger associate who is more of a digital native, and he's like, yeah, I get it, I don't want to travel around Africa because, looking for deals and sitting in these hotels. So, but then you can then have some of the older school GPs who's like, I don't understand this. I want to go to, talk to the minister and get the deals. Anyway, you get through that conversation and then eventually says, okay, we give it a try. You set them up on the platform, they create a profile. And that's the other thing with the way our platform works, is essentially designed to self-service, right? So as a PE fund, you go there, you're like, okay, you know what? We're currently overweight in agriculture in Southern Africa. I want to target West Africa, I want to target East Africa, now I want to target manufacturing businesses or FMCG businesses, and I want companies of, $30 million revenue with, 10 million EBITDA. You essentially set it up yourself based on your investment strategy at that time. Because that's the other thing that you find as well, which, it sort of seems a bit, just weird to me that as a fund, you raise a fund, it's a 7-year fund, 10-year fund, whatever it is. The strategy, investment strategies changes over time as you've deployed the capital, and you're starting to get overweight in certain sectors, overweight in certain countries. But how does the market know that's the status of your fund, right? How do you attract deals that match your investment strategy? So all well and good, you can still go around and talk to the people or talk to the bank saying, I'm looking for, now we've done enough FMCG, now I want to do more real estate. Okay, that's fine. You tell that to the banker or investment banks where you source deals, and if the guy doesn't get anything that fits that criteria, how do you get that? But with a platform, you can essentially every quarter, as you wish, go in there and update what you're targeting and what your current investment outlook is, and that would again, deliver those targeted opportunities to your inbox.
Thanks a lot, Lenre. And maybe just briefly what we do, it's slightly different in some respects. I mean, we vet as well. We vet in a great deal of detail. We like to source our deals through advisors because we know the advisors will have done work on it themselves because they will attach their names to the transaction. And these are particularly transactions where there is, for example, a valuation event involved. So that's typically an equity type transaction. Where we deal, and this is because we've chosen to be we actually put ourselves out there to be regulated by the Financial Conduct Authority in the UK. And what that does is it means we are able to deal directly on debt, but we have to check the stuff really carefully. So we have probably more human intervention, I suspect, than you might have at Orbit. The other thing that we do try and we insist on these days is that if we are doing distributing a transaction, we look for exclusivity on that transaction, and we find it's actually good for the client who's raising money, but it also gives us an opportunity to have the authority to have authoritative conversations with investors about deals that we have sourced because we know that it's a proprietary deal, and that actually improves the quality of the transactions. I mean, I think I'm not sure how many transactions you might consider if you filtered them out and what percentage you end up engaging on and what percentage you end up perhaps attracting term sheets. Do you have any statistics like that might give a bit of feel for it?
Yeah, sure. I mean, so for us this year, we've probably done circa $450 million worth of term sheets through our platform. And the other thing is, obviously, we cover a wide range of asset classes, right? So it's not just the private equity crowd that we deal with. So that's the one thing. But the other thing as well is that, I mean, we're a UK registered company as well, and as we were thinking about the business model and the scalability of what we're building, we very quickly realized that we want to create an infrastructure for transactions, right? An infrastructure for transactions. So we are not heavily involved in the transactions. Our role is to make sure that the quality of the interactions is premium, right? So only the good quality deals get through. And the institutional investors on the platform. So that in itself creates almost an innate ability for transactions to get done pretty quickly. So in terms of volumes, just as you asked, right now we're processing about $1.2 billion worth of transactions on our platform. As I said, about $400 million of those have secured term sheets right now, and each of those transactions are at different stages of investment decisions with various investors. But in terms of the ratio of transactions that make it into the gate, right now it's still about 3 out of 10. So it's about 30% that would make it. I.e., these are the transactions that have got all of the requisite information that you require as an investor to essentially be able to move quickly. I've also said that there are other ideas in terms of how we can improve that ratio by also supporting those companies, because it's not necessarily the case that a company that does not have all of the required IMs and the fancy financial models is a bad business, right? It's just not investor ready. So how can you support those businesses and provide additional input or support to them that allows them to get investor ready and attract the right sort of capital they need to grow and scale their businesses?
Gotcha. I mean, maybe just to, and I suppose from our perspective, it's probably worth knowing that the deal platforms that Lonra and I run, we are not allowed to advise. We may not write IMs, we may not prepare business models, we may not negotiate the deals, do due diligences. You're excluded from doing that unless you're regulated. So that's typically the role of a corporate finance advisor. The role we tend to play, and certainly Orbit, is really just it's the matching of the deal. And I mean, to that extent, I'd have a few stats on what we've done. For example, we probably looked at the middle of June, over 18 months, we'd reviewed about just over 420 inquiries that we'd reviewed. We had engaged on 12 at the time, which represented about 2 billion rand. And of those, and that represents just about a 97% noise reduction ratio, if you can put it that way. We try and take the noise out of the market for the investors. So we also know that we attract term sheets on about 70% of our deals by value, over 70% of our deals by value. And I think certainly the experience I've had, and I'm sure you feel the same about it, and that's just that as a deal matching platform, you don't really have any control over the process. Once you've introduced an interested party, it becomes harder and harder to control it, because you don't know if someone's going to pass the due diligence. You don't know if somebody's going to negotiate sensibly. You don't know if they're going to have a good idea of the valuation of their own business. It becomes quite hard to control that process afterwards. But certainly for us, although we've closed a number of deals, we take the ability to find term sheets as quite a useful metric for finding investors. We've got a few minutes left. I thought maybe, are there any questions anyone has at the moment? So we've just been rabbiting on, and I haven't looked for any questions. Graham, are there any? Okay. I mean, maybe just as we come to wrapping up, and I'm interested just to know, perhaps as a final question from each of you guys, is in this technology space, in your business, I mean, what keeps you awake at night? What keeps you awake at night? What worries you?
Certainly not AI.
Yeah.
But no, I think what I mean from our standpoint is just getting the ecosystem to think differently, right? So I think someone used the term sort of the legacy mindset. There is still a lot of overweight in legacy mindset within the ecosystem. And when we look at other jurisdictions and the evolution that is going on out there, we don't necessarily always have to be the last of the party within the African investment ecosystem. So getting everyone across board, across asset classes, who are sort of active participants within the African investment ecosystem, to think digitally about essentially every activity you do. Even if you're a financial service provider, how do you originate your business? If you're an investor, how do you originate your transactions? And again, obviously with the gents, even your back office support, how digital and scalable is your operational setup? So I think for me, it's just like, how do you kind of, get people to think differently about how they do business?
From my perspective, it was one of the topics we're going to talk about, regulations across the board. It's just trying to keep up, trying to choose which regulations to build to, because if you try to build to everything, you'd never stop. And obviously the different nuances, GDPR and POPI, and just how they're the same, but they're not the same. So it's just trying to get the right nuances to those. But yeah, so regs.
Luckily, I'm able to sleep at night, so nothing keeps me up. But I do think in the industry, specifically around what we're talking about today, the idea that there have been a lot of inflows. Many people in the room have been in the industry for a while, but there have been many inflows into this asset class. And like I said, predictions are it will continue to happen. But that, going from point A to point B, people visualize it as a straight line. It never is. It's often a zigzag. So there is some zig or some zag coming up in the industry, and when that happens, either assets will temporarily not be available, and then when the tide goes out, what's exposed and what's there. So continuing as an industry now, while assets are coming in, to make investments in improving transparency, in improving governance, that will help you and position you really well for when that does happen. And then, obviously the flip side of that is if there is a crisis and that does happen, the organizations that are already doing these kinds of things that will be coming down to you as regulation, you'll be best positioned at that point. So I would say that's probably something that in the space you can think about making the investment now, because it will most certainly help you at that point when that happens, not only today, but to continue to scale up and grow the asset size in the industry itself.
Thanks, Mark. I think maybe just to close off, I'd just first like to thank Ben. SS&C Advent is, as you called it, they're one of the main investors, or they are the main investors at the moment. What did you call them? They were the Grand investor, grand sponsor.
Please,
so I just like to
remember,
particularly thank Ben. He's come all the way
grand
from London.
Sponsor.
Yeah, the grand sponsor. Yeah.
Thank you.
The grand brand sponsor. So Ben, thank you very much, and particularly to your organisation for playing a role in making this day possible. Also, thank you, Lonray. You also come from London. And in Mark, you've also come from London, and I actually feel quite guilty having come from Durban. So thank you very much. Thanks very much, guys.
Cheers. Join me in thanking the panel.